Check this out, team. TQQQ is testing $25 a share. So it looks like we're still experiencing that slight resistance level. Not really able to break above it. If we go on that 4-hour time frame, we could see TQQQ now beginning to trade above the EMA line, which is a step in the right direction. It's not the end-all be-all. Again, tomorrow we still have that Jerome Powell speech in front of the U.S. Senate, and then on Thursday we have Jerome Powell speak in front of the U.S. House of Representatives. So please make sure that you guys are aware of that. We are still in a consistent descending pattern. I just had a talk with my Learn Plan Profit group about reminding them that, again, 1 or 2 or 3 green days does not determine that the market is now beginning to recover. The reason that I'm making this video is, first off, congratulations. I mean, market's up nearly 10% on the day. I feel like that's something to kind of congratulate yourself about, especially for all those that decided to buy the dip. If you're part of my Learn Plan Profit group, you know exactly what it is that I'm talking about. When the market sold off due to the CPI data report, we talked about reducing our position size before that report. Once it came out, again, it was kind of iffy about buying the dip because the market continued to bleed. So instead of predicting the future, we just allowed it to bleed. But once it began to actually establish signs of a support level, it began to be very easy to understand that, okay, I don't mind taking a small position here. And then Friday and today, when it began to indicate signs of an uptrend, it became a little bit more reassuring that, I can add more to this position as it's making me money. And then now today, right? I still think that the market has some room for it to move up, but the only reason I'm talking about potentially reducing your position size is we have a really strong resistance level at $25. And the reason why is I think based off of previous resistance levels, we're retesting that. And then on top of that, we have those 2 speeches by Jay Powell, both tomorrow and on Thursday. I think it's something that can influence the market. Do I really think that it will? No, I really don't think nothing new will be said. But just in case, again, the market's been bearish for 5.5 months. This is not a time, in my opinion, to be super aggressive. And while everyone else might encourage you to get super hyped up and congratulations, yes, on your green days, but I'd like to keep you very level-headed and to remind yourself that, again, there's so much upside margin that we have to work with. We don't have to take a super aggressive approach right now when we're still in that bearish market territory. The last thing that I do want to share with you is I can use SPY as a little bit more of an example. The reason why is the market aggressively sold off after we surpassed that 20% mark. For those that don't know what I'm talking about, a common variable or factor that a lot of analysts look at when we're going into a bear market is looking at previous highs. This is the S&P 500 ETF. And then when we drop over 20% from previous all-time highs. And if we look at that and then where we're at right now, when we did drop below that 20% mark, there was a new wave of selling pressure because we dropped below that 20% mark. Now, what happens if we break back above that 20% mark? Well, that means that we're no longer supposedly in this technical bear market. And this is why I'm bringing it up. We're getting really close to that 20% mark from previous highs to our current price point. So make sure that you're aware of that 20% mark, because if we're getting close to it, yes, it can act as a resistance level, but if we break above it, there could be a nice little breakout and a nice little rally that might be short-lived. But again, I just want you to be aware of these different variables that have caused the market to sell off when it broke below, but can definitely cause the market to break out if it breaks above. So just wanted to update you guys. Today is a super short, super sweet video. I'm very happy with how today has played on out. 35K on the day, and I'm getting ready to lock in profits and reduce my position size. I'm going to go from, this is probably one of the most aggressive positions that I've had on TQQQ. I don't think any of you guys have ever seen me have over 16,000 shares of TQQQ, but I'm probably going to reduce my position size back to 6,500 shares. So I'll be selling about 10,000 shares if this thing begins to indicate signs of a reversal. I want to allow it to run as there's no break of pattern, but as soon as this thing begins to pull on back, I'm just going to go back to my 6,500 shares that I'm very happy to hold. Again, just because I decide to hold does not mean that you need to. I will never be like other people that encourage you because they're invested that you should be invested yourself. My thing is I want to encourage you to look out for your future self. So make sure that whatever position you put yourself in, regardless of how conservative or how aggressive, that it's something that you can tolerate, not just based off of best case scenario, but worst case scenario. If you're not taking risk management into consideration, then you're simply preparing yourself to fail. So I wish you guys nothing but the best. I'd love for you guys to join us for the live stream for Jerome Powell's speech tomorrow. If you guys want to tune on in and watch me trade live, I'm going to be doing it exclusively with my Learn Plan Profit group, and that's going to be that second link down below. So make sure you take 1 minute and learn a little bit more about it and see if you can join us tomorrow for our live trading session. I appreciate you guys' time. Hope that it earned your thumbs up. Let's stay connected. Everything is in the description. And like always, let's make sure that we end the year on a green note. Take it easy, team.